So in this video, I'm gonna break down how to journal or how I journal my trades, um, and really the benefit behind journaling the trades. So when I first started journaling, I saw like almost an instant boost in profit, um, and it's really to help you hold yourself accountable, help you see the mistakes you're making. Like sometimes you don't know exactly what you're doing wrong until you see it. And you're like, why did I do that? And then the reason why it's like that is because like when you're in the market and you have, hundreds of dollars and sometimes thousands of dollars fluctuating in minutes, like that's a real emotional thing. Uh, so you might not be thinking straight until you come back and review your trades and review your charts, and then you see like, oh, I was tripping. And then with more experience, you'll be able to control your emotions in the moment and make better trades because you saw, you watched hours of film and you journaled all that stuff, all your previous trades. You'll see, like, oh, I've seen this before. I know what's most likely about to happen. And then it'll give you more confidence to get in and out of trades more efficiently. So I'm going to basically break down this trade I took on Friday, and then I'll break down um, a journal of a losing trade and a journal of a winning trade, and show basically how it relates to this trade on Friday. So basically, I saw we're on a daily chart for SPY. I don't know, daily chart for SPY. I saw, just focus on these two gold levels, 544 and then 547. We're basically stuck in between this range all week. It was an absolute snooze fest, real boring. You could have made some money if you shorted that resistance and bought that support. But if you're trying to trade the breakout like I was, um, you didn't have a good time. So one of the reasons I was trying to trade the breakout was, I saw we gapped up hard, and then overnight we gapped down. Seller stepped up here. We're below the 5 day moving average at that point. Seller stepped up here again, still below the 5 day moving average. But every single time we got down here to about the 543, 542.5 level, buyers just kept buying it up. So it wasn't ready to break down. But I did know once we did get a close above or below this range, it was going to be a sharp trip to previous all-time highs at 550, or we are going to come towards this gap close at 537. So I knew a big move was going to come eventually. Just had to stay in the game. And also, we had some news on Friday. So, usually, well, sometimes price might just wait until that news catalyst to have an explosive reaction in either direction. So you just have to know, you know, have that in your back pocket when you're making decisions. So really, this is a pre-market. We were above this level. This is the top of that range at 547. We came down to test it, and I saw we did like a little fake flush down. It was about 4 cents down, but then started buying it back up. So I wanted to test it out. I got in with half my position size here at 547. I was up, so I bought myself some room for my second entry, which is my full entry at 9:45, which was a close on a 15 minute above my level, which is one of my entries. But I'll do a whole video on how I enter and exit and where I take profit. But I was full position at this side at this point, and then I'll know I had another 15 minutes until data drop or news drop, and that was gonna most likely push us up to this target at 550, and that's why I took profit. Nice trade, 45 minutes in total, from start to finish. Can't ask for a better day than that. But it actually gave us an opportunity to have a better day than that, because once we got to this 550, we had a break above this 550 level and then a break below, which is a false breakout setup. So at that point, once I see a false breakout, I'll look for either a fair value gap entry or a back test of this resistance line. And that's exactly what it did. So it broke down, tested, failed, and then here's 1030. So after the 1030 closed below this 550 level, I'm looking for price to reject again, and that's what it did. Now I didn't take this trade; I was done. I closed my charts down after, but when I was reviewing, I saw this happen, and it actually played out nice. Dropped pretty much the whole day. It came down to the top of this range, chopped in a little bit, got all the way to the bottom of the range at the end of the day. So real good trading day. You could have made money both ways, and that's really the way to do it. But I like to get my money and get out, go enjoy my day. Um, as far as the trade, breaking down the actual trade, so I'll start with the losing trade first, and I'll show how it correlates to what happened on Friday. So basically, go down to my notes. So when you journal your trades, all it is just saying like what happened, what were your thought process, what were your emotions during the trade, and you could like relive the moment after the market is closed or after you're done trading, and that's how you build that extra experience or those extra reps. So basically, I said I saw a beautiful setup on the hourly chart, but I hesitated because it happened before market open at 531.5. I also did not take the short trade at 536 because of the overall bull trend. Later in the day, I went long at resistance, which is 536, which is a low probability setup, and it cost me -1 hour. Going forward, I would need to be more confident in what I see, especially on bigger time frames. So, long story short, I hesitated before to take the long entry because it happened before market. It rallied straight up to 536, and then I didn't take the short entry because I wasn't confident in it. It was a bull trend. I saw how hard we rallied, but you know I just didn't take it. So I hesitated, and price just kept. It went up to 536, dropped. Went up to 536, dropped. So on like the third time, I was like, all right, it's most likely going to break out here, and it dropped again. So I lost the trade basically because I was following my emotions and I didn't just follow the charts. So that's what happened on that trade. And I'll go to a winning trade, and then I'm gonna go back to the charts and show how that losing trade I had on the 7th played out. 1, 2, 3 weeks later, and I had a 5R trade off of it. So let's just go to this one. All right, so this is a template I used. So it gives you the pre-market game plan, a day recap, overall recap. Overall, we're still in the bull trend and in consolidation on the daily and hourly chart. This means I'll be looking for loans off support or supply zones, demand zones. Um, on the watch list, SPY as always. Day recap, mistakes I made. I don't think I made any mistakes today. What I did great. I was patient, did not hesitate on my entry. Let the trade play out for the most part. Did not move my stop loss as close as I wanted to. Low emotions throughout the trade. Reinforcement to myself: keep up the win streak. Keep the simple method. Very professional. Me to get out of drawdown. Now it's time to reach stage 1 profit target. So you're just talking to yourself, coaching yourself through, because trading is a really lonely journey, and it's really a battle versus you. So it's not fun nor easy. Overall recap: great progress. Overall, starting in June, did not panic. What is that? I don't know. Did not panic basically for having a rocky start in May. Respected my stop loss, stayed in the game. Big news tomorrow, but I have to stay trade. But I have to basically trade smart, trade safe. So that losing trade I had on Friday 3 weeks ago, basically literally copy and pasted itself again. And the market doesn't repeat itself, but it often rhymes. So it'll keep giving you the same, a very, very, very similar setups. You just have to wait for them to present themselves. So again, this didn't happen. The move didn't happen pre-market, but it was approaching in pre-market, and right at market open, it pretty much presented itself. So it was coming down to a key bounce area. I took the trade and it went straight up to this resistance area, and then also again it gave me a entry to go short. And on that day, I basically hesitated on this entry. I didn't catch FOMO, but I was like, man, I missed out on this play. And then when the resistance entry came, I also didn't take it at first, and I basically, and right here, I would have went long again, thinking, we tested. We're eventually gonna run out of sellers, and then we're gonna go higher because that's what I felt. But the charts right here say, no, sellers are here on a 15 minutes, sellers are here on an hourly. So the charts are telling me, all right, this is a sell, and I would have made money going down. But on that day, I basically missed out on this rally, and I felt like it was gonna go higher, so I bought along here. But in actuality, I should have went short. So again, it basically did the exact same thing it did 3 weeks ago, except this time I profited real big, and I only took one trade. So that's the perks of journaling your trades. And if you're not doing that, you definitely need to start. And if you don't know how, they have templates on TradeZilla. And if you don't want to get TradeZilla, at least write your trades down at the minimum. But if you're gonna do this for real and want to make money, I definitely get with some sort of journaling software that's gonna track your trades and keep track of everything.